Good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on the January 27th of 2019 Forex Weekly Outlook, our start of the week analysis for the Forex trading room, as well as end of the week. We take a look at the week that ended and the week that's coming up. That being said, we'll jump into our usual agenda. We'll be looking at prior week, the currency strength meter, the fundamental announcements that are on the calendar for the week, an analysis of the major pairs, any setups I see in progress, and a few words in conclusion. As regards to prior weeks, starting off with the long-term ledger, not a whole lot of change. The only noteworthy thing, and we'll cover that later, is we have reversed our position on the pound. We're now long on the pound simply because that's what the market is doing. So we've exited the pound shorts. We've gone in the opposite direction. Those trades are actually in profit right now as we speak, as of the market open about an hour ago. And other than that, a few trades were closed. Well, those were closed as a result. A few unconnected trades were closed as well. Notably, one of our Euro New Zealand trades hit its adjusted stop loss and took us out. And we promptly re-entered that one. So we're back into Euro New Zealand in the same direction. And that trade is also carrying profit. At the bottom of the ledger, you see the newest pound trades are all in a long direction. So we are long the pound very cautiously, waiting to see what happens and adjusting stop losses as we go. But it looks like the market is going in that direction, and we do not fight the market. We take advantage of the market. So that's where we're at there. On the short-term ledger, or on the short-term trades rather, after taking a hiatus of a few weeks simply because the market wasn't doing anything that based on our systems we could take advantage of, we had stopped short-term trading. We've started it up again last week because we saw the opportunities, and we got into two trades. They were both at profit at some point before the yen reversed. One of them took us out at a break even. The stop loss had already adjusted. Actually, both of them had the stop loss adjusted, but the other one was still carrying a negative 25 pip stop loss. It had not adjusted to break even yet. So we did take a 25 pip hit, very minor hit, as you can see from the stats, basically a little bit over 1%, which would be $50-something in that as a loss for the short-term account for the week. If we see any more short-term trades this week or any other weeks to come, we will be taking them. I'm not entirely sure that we're going to be ramping up short-term trading yet. That doesn't depend on me. It depends on the market. And that's not to say that short-term trades aren't there to be had, but the systems that I use for them, and by system, I don't mean anything computer related, but rather the set of rules that I observe for short-term trading, the current market situation is not conducive to those, except, as I mentioned, these two trades that we took last week. So to conclude, if we see anything that is a likely good short-term trade, we will take it, but we will also be very cautious until the week the year properly kicks off. It's still in a lot of end of year, beginning of year turmoil. So that is where we're at with the results. Notes and opportunities for improvement. As I mentioned, we're starting to enter back into the short-term market very cautiously. And more importantly, we have reversed the direction for the pound for now. And Brexit is still going to be the flavor of the week, with a new vote scheduled for this Tuesday, where Parliament will discuss Theresa May's newest plan for Brexit after having shot down her previous plan. I'm not sure that they even said what's in the new plan yet. I haven't been paying that much attention to it. But either way, this has to be something different from what was presented last time, and she's only had 2 weeks to prepare it. So I'm not sure exactly what they're going to be voting on Tuesday. And more importantly, it's looking more and more possible that Brexit itself is going to be scrapped, and at some point we will have a communication from the from the UK government to the Europeans, either asking for an indefinite postponement of Brexit while they figure it out, or indeed canceling it altogether. This may or may not involve a second referendum where the UK citizens get to vote yet again on what they'd already voted on. So it's all up for grabs right now. But in general, this has given the pound a lot of support, because going back to where they were before the vote and no Brexit in all this is obviously very good for the pound, and that is now a very real possibility. So that's the real explanation for why the pound has been getting stronger. It's on that hope, which was a very slim hope a month ago, but is now a distinct possibility. And like I said, we're going to be trading in that direction until we see something reverse it again. If Brexit gets put back on the table, I would expect the pound yet again to weaken, but we don't deal with what ifs or anything like that. We trade what's actually happening in the market. So for now, we are long the pound. We are bullish on the pound, very cautiously, very carefully, and we're not going to give it too much room to move, simply trailing stops and whatnot to keep us as much in profit as we can and to keep us safe within those trades. On the short-term account, no trades remained open over the weekend. The 2 trades that we did open were closed automatically on Friday when hitting their adjusted stop loss. And with that, we're going to move into the relative strength meter for this week that just ended and the last 30 days. Apologies, I did not fix the date on this slide. It still says January 18th. It should say January 25th, but I assure you the graph is accurate. It does reflect the week that ended on Friday, January 25th. So looking at the prior 30 days, volatility has not changed much. It was at 4.92 last week when we did this review. So 0.0001% is what it has changed. So that's irrelevant. It's basically the same thing. So we have steady volatility on the 30-day count. And on the weekly, it did increase by about a percentage point. So we've got volatility coming back into the market this week that just ended. In particular, we can see that the Aussie, the CAD, the Euro, those Aussie CAD Euro were very middle of the pack. So they won some, they lost some. Swiss was one of the losers, except as regards to dollar. The dollar had a very poor week, and we'll get to that. But the Swiss depreciated against everybody except the dollar. The pound got stronger. As I mentioned, the pound is getting stronger, and we cannot fight that. That is simply what the market is doing. So we'll try to ride that trend for as long as it lasts. But right now, the pound appreciated last week against everybody except silver, and we're really not looking at the bullion here. So against every other currency, it not only strengthened, it strengthened a lot. You can see that deep blue color in everything except for the Kiwi. Everything else was just very, very bright blue, which is the extreme of the 2.65% move. So that is a huge move for the pound. The yen depreciated against everybody except the Swiss and the dollar. So not quite middle of the pack, but not as bad as it could have been. New Zealand had a pretty good week. It gained value against everybody except the pound. Dollar was the clear loser. The shutdown continued for most of last week, the government shutdown in the U.S. This weighed on the market, and there's a few other things going on that had also been concerning the market as regards to dollar. However, we do have a lifting of the shutdown, so the government is officially open again for business. It was the longest shutdown in the history of the United States, and I'm going to add yet another, however. This is temporary. So President Trump has reopened the government temporarily until February 15th. During that period of time, there's supposed to be conversations and some sort of agreement on what to do with the wall, which is the main sticking point. And if they don't have an agreement, the government will shut down again on the 15th of February, Or, and this is another option, there may be some sort of executive decision where President Trump says, I command the wall to be built, and it will go to the courts to see whether he has that kind of power or not. This is something that his predecessor, Obama, also used quite a lot, legislating by pen from the Oval Office. And he did manage to push through quite a bit of legislation and regulations by doing that. So it's not unprecedented, but ultimately there will be court challenges if that happens. And at the end of the day, what this does is continue to put uncertainty into the market, and we may indeed see that the dollar continues to weaken. We actually have open trades in both directions with the dollar, some playing into dollar strength, some playing into dollar weakness. So we're pretty hedged with the dollar. We'll see what happens as the week kicks off, but I would expect there to be a lot of back and forth with the dollar in days to come until we have a little bit more clarity. And last but not least, bullion. Silver had a brilliant week. So you see that silver rose against everything else out there. And gold was not far behind, rising against everybody except the pound and silver itself. So that's where we're at. Again, my apologies. This should say January 25th here at the bottom. And other than that, all the other data is correct. And we now move into the fundamental announcements for the week to come. We have a pretty decent calendar schedule of announcements coming out. Tonight, we're going to have the Bank of Japan monetary policy meetings, technically scheduled for 6:50 p.m., so in about 40 minutes or so. But the Japanese have been very, very laissez-faire when it comes to keeping these schedules. I'm not even going to trade this one. Just let it happen. I seriously doubt it's going to happen at the scheduled time anyway. But regardless, I'm not going to be paying too much attention to that. Tuesday, we have CPI coming out of Australia, and I will not be trading that either. That doesn't tend to be to move the needle significantly. On Wednesday, however, we do have the Fed interest rate decision coming out at 2 p.m. So we will be opening up the trading room for that. I've added arrows to the calendar to show which ones I am planning on trading live. So Wednesday, we have the Fed interest rate decision, and at night at 10:30 p.m., we have the Reserve Bank of Australia interest rate decision as well. So we have two interest rates coming out. I would say that the expectation with Australia is that there will be no change. It'll stay at 1.5%. As regards to Fed, well, they just raised it last month. The expectation is also that they will leave it be. However, this is a new year. And they can do whatever they want. They did signal last year that they were going to do about 3 interest rate hikes this year, and they're free to do those any month they want, including this month. There's also a lot of talk that based on the weakness that's been coming back into the economy here in the U.S., they may decide to not do anything this year, but they haven't said so. So until there's firm guidance, we'll continue to attend these interest rate decisions and see what they bring. Again, I don't think there's going to be any change, but we have to show up to see what happens and see if there's anything that can be traded. Thursday, the 31st, last day of the month, we will have the GDP out of the Eurozone quarter over quarter and year over year. And we will also have the core personal consumption year over year coming out of the U.S. And of course, Friday, Jobs Friday, we're going to have our non-farm payroll coming out on Friday at the usual time, 8:30 a.m. That one will also be traded live. So we're going to have 3 additional sessions this week to trade fundamentals, 2 on Wednesday for the Fed interest rate. And I will always open up the trading room about half an hour before the actual event. So we'll be opening up on Wednesday at 1:30 p.m. and again at 10 p.m. On Wednesday, we'll probably not have the 8 p.m. session. We'll wrap that into the 10:30. So I'll clarify that in the email I send out with a summary. So no 8 p.m. on Wednesday. Instead, we'll do a 10 p.m. for the Reserve Bank of Australia decision, as well as our regular trading session for the 8 p.m. Then on Friday, 8 a.m. Eastern Time, we will be opening up the trading room to trade the non-farm payroll out of the U.S. Last month, we saw a creation of 312,000 jobs. That was it far exceeded the expectation. And I'm not sure what the next, what January actually would be. December's numbers that are coming out. No, I'm sorry, January's numbers would be coming out on February. So we'll see what that brings. I think the market is a little bit frayed at the edges as regards not just the non-farm payroll, but everything else going on. So this might be one of those that we really can't pin a needle to it and figure out what it's going to do. You know, if it exceeds expectations, dollar gets stronger. If it's less than expectations, dollar gets weaker. That might get thrown out the window. And we have one of those where anything at all could happen, in which case we'll trade it accordingly. But just so you guys know, not to expect common sense on Friday, because there may be none to be had. And on that note, that is it for all the housekeeping there, and I'll move into the analysis for the pairs. All of these are daily charts, so we can see euro dollar. Euro dollar continues getting the euro continues dropping against the dollar, except on Friday. Friday, it did a significant retrace all the way back into the cloud, and at this point, we're waiting to see what the market opens bring us, but. It had cleared the cloud. It was dropping very nicely. And then, of course, we had that on Friday. So not sure what it's going to end up doing. I still have the expectations that it will hit or it will attempt to surpass the prior low. And I do have an open trade, and we'll be leaving that one open to play out as it will. For now, I'm very eager to see what the market open brings as regards to euro dollar and the euro pairs in general. Pound dollar, and I mentioned this at the start of the call, the pound has broken out on pretty much every single pair. It has crossed the Ichimoku cloud. It has crossed any trend line that was offering resistance, and it's now making a pretty decent attempt to go back to the top. And again, all of this is on the hope that undoing Brexit is actually a possibility right now. So we'll continue to trade this one up after that breakout. That's the only thing we can do. But I'm still going to be very cautious on all of these pairs and making sure we don't get caught on the wrong side of one of these moves. So any open trades on the pound, I will be making sure that the stop loss is protecting us as much as possible, but that we still give it room to continue moving towards the top until it stops. And if anything in the news cycle suddenly brings back fear, doom, and gloom into the UK, I will just as happily trade it down. But I'm going to be very, very cautious, making sure that we only get in when things are in our favor. USD/JPY, it continues trading flat. This was one of the trades we opened short term last week, and this is the one where we got taken out at 25 pips loss. Not a big deal. It's still trading sideways. It looked like it was making a decent attempt towards a test of the lows, which failed on Friday. Everything was going well until Friday, unfortunately. So we'll wait for another opportunity, long-term, short-term, whatever the charts tell us, but not going to be just today. USD CAD. At last, the USD CAD has made a significant drop. This was partly due to U.S. weakness, partly due to oil prices, but we see that Friday moved the needle significantly in our direction. This is another trade that we've been holding for a while. We are short. Our targets are down towards these dashed dotted lines, and it is now very close to breaking out of the cloud. This is another one where we have to wait for the market open and probably the first 24 hours of trading, which have already started, to see if we can peg a direction on this pair and all the other CAD pairs for the week. But I am extremely hopeful now that some sort of move has started that we're going to start seeing some action on this trade. USD Swiss, not much change. It has come back in our favor. We're short on this pair as well. It went against us for a significant number of days. It crested right at the top of the cloud, Ichimoku cloud, and has now also done a turnaround, again thanks to dollar weakness more than anything else, but it is starting to move in the right direction. So again, open trade and getting closer to our break-even point. We're still carrying a negative deficit on this one, but it did move much closer this week that just ended than it had in at least 3 weeks prior to that. So another one will be keeping a close eye on. Aussie dollar, and this is one I refused to trade last week, even though it was sort of giving a half-hearted sell signal. It was giving us a short, but it wasn't very clear, and luckily we stayed out of it because, again, Friday just undid the entire movement of the week. So everything that it had done for the week got undone on Friday as it went back towards the Ichimoku cloud. So we did not trade this one, and I still wouldn't trade it. I'm waiting for something more deliberate and definitive out of it before I jump in. Kiwi dollar, we are in this trade. We are short. Obviously, the dollar weakness didn't help us this week. So it has gone into, it once more pierced the trend line. As I said, we are in the dollar, we're trading it in both directions. So we have some trades that are trading towards dollar strength, others dollar weakness. So all in all, we're pretty protected. And as soon as there is a breakout, I'm going to say that our losing trades will be stopped out and our winning trades will probably go on to make as much or more as any of the losers. So we're hedged. I'm not really too convinced on direction yet. As I said at the top of the call, the dollar is in a very odd position. Lots of uncertainty coming out of the dollar, and that's why I'm trading it in both directions. So until there is a breakout, we're going to be seeing some trades at profits, some trades at a loss, and that's just the way it works. Aussie Canadian, and this one has also been moving quite consistently into CAD strength as we see oil prices recovering. It wasn't anywhere where I would start shorting it. I was waiting for it to break out of the cloud, out of the Ichimoku cloud. It did so on Thursday, and then Friday went back up. I didn't enter the trade simply because it was a Friday, but I would have shorted this, and I would expect it to continue trending down following that trend line until further notice. But I wanted it out of the cloud. It's not quite there yet, but the next 24 to 48 hours may see us trading this pair. And again, we would be trading it down. It's the only direction I would trade this one at this point in time. Euro Swiss continues moving sideways, and in particular, we see that the Swiss suffered on Friday, as did quite a few other currencies. Friday made them go against whatever they had been doing for the earlier part of the week. So everything that happened throughout the week got undone in a few hours on Friday as it went right back up to the top. We're not trading this one right now, and no reason for us to even look at it for a few more days. So I want to see something else happening before I jump into the Euro Swiss. Euro pound is in a very interesting position. It's right at the bottom of the chart at a major level of support. Obviously, we've had that pound strength that has been hitting the market since Theresa May's plan got voted down 2 weeks ago. We'll see what happens on Tuesday when the next vote is scheduled. I would be very eager on the slightest sign of pound weakness or euro strength to start trading this one back up, simply because it's at a natural level of support and at the bottom of the chart. So I don't see a whole lot of opportunity for it to keep going down. And rather, I see a very nice potential for us to be able to capture anywhere up to 400 to 500 pips on a trip back up. But again, I'll wait to see that actually happening, even if I have to give up a few pips before I jump into this trade. But definitely one to keep on your radar. Euro JPY, it is still, as far as I'm concerned, on ignore. It continues following the bottom of that slightly rising channel, more of a sideways, but it is rising, though, very slowly. So long as it stays in that general area without breaking back into the channel or just dropping away from it, this is going to be a no trade for me. Euro Canadian, and I think we already have a trade. Yes, we do. We have a trade in the Euro CAD that is open long term right now. I entered on this attempt back here to cross the Ichimoku cloud, which failed. So we carried a paper loss for about a week. And then this week that just ended brought it back down to the break-even area. So the trade is at break-even right now. And I would hope that continued weakness out of the Euro and continued strength out of the CAD makes this one that double whammy that we always love to see, and we get about 300 pips at the very least out of this movement as it tests the prior lows. So we're in this trade already and no change. Pound JPY, this was one of the pound strength trades that I opened on Friday, and it's carrying a little bit of profit as we speak. And in general, I'm trying to trade it as it crosses that Ichimoku cloud. This is one of the few that have not crossed the cloud on the daily, but you can see that it's making every possible attempt, and it's looking very good that it will break out if we continue to see that pound strength. The vote, again, scheduled for Tuesday, and that would be Tuesday their afternoon. So their evening, I should say. So our mid to late afternoon is when this is going to hit the news. I'm going to be very eagerly watching it. But more importantly, Monday, which nothing is happening on Monday, should tell us whether that trend of pound bullishness is going to continue. So we'll be playing that one by ear for the next day, and then, of course, be very vigilant for the actual vote in Parliament. Aussie JPY, much like the Euro JPY, it is just hugging the bottom of a channel, and until it either gets back into the channel or drops, I'm not going to be too concerned about it. We did trade it short term last week, and this was the one that took us out at break even. It gave us a nice bit of profit for a day, and then Friday it completely reversed itself. We had adjusted the stop loss, so no loss. It was break even, but still very disappointing that it didn't have the strength to keep going. So long term, I'm not looking for any entries on this one. Short term, we'll see what the week gives us. Euro New Zealand, this is really the pair I'm most in love with this year. It's given us many opportunities to trade it down since the beginning of the year, and we've taken pretty much every one of them. I think we're on our 5th trade this year on the Euro New Zealand, and it's working very nicely. We've been shorting it. That's the only direction we've been trading it. And right now it is about to break out of the Ichimoku cloud, and based on the technicals, I would think that it would have the strength to break past this bottom and make a new low. Not sure how beyond that prior low, but still, that's a very nice potential for that trade. However, I'm being very careful and very cautious when it comes to trading these long term, simply because of the season we're in, where there's a lot of uncertainty in the market, which is why I've been in and out of this trade so many times. As it drops, I take profit. When it reverses, I get out. When it starts dropping again, I re-enter. Retraces, I get out, repeat. And now, as I said, we're on the 5th ride on the Euro New Zealand trade, and very happily so. This one has given us the majority of our profit this year has been taken out of this pair. And I have really high hopes that one of these trades will be the one that takes us to the bottom and beyond. Pound Canadian, it's this is one that's a little bit odd. I am trading it up simply because the pound is going up, but this one is probably the most dangerous one to trade and the one I'm keeping a very close eye on. Why? Because the CAD can gain strength at any point in time if oil prices continue to rise. Best case scenario, if that happens, is that it would start trading sideways and not give us any significant loss. But worst case scenario is the CAD gets significantly stronger than the pound, and this one crashes towards that trend line. That would not be a good thing, and I would get us out of the trade at the first sign that that is indeed happening. For now, it's carrying a bit of loss. You can see that it got up when it broke the prior high, and then it has retraced on Friday 30, 40 pips, somewhere in that area. So not a huge paper loss, but still, I'm eager to see what the week brings us as regards this pair. And last but not least, the pound Swiss. We are also long on the pound Swiss. This is our third open pound trade into pound bullishness, and this is the one carrying the most profit right now of the open trade. So we're trading that one for as long as it continues to head up. I have annotated the chart with the expected resistance points as it makes its way back to the top. But this one has been the most aggressive thanks to the pound strength as well as some Swiss weakness, and has made this one a double whammy. So we'll as with the other pound trades, I'll be very cautious, but I'll be trading it up for as long as it wants to give us profit. In particular, I would like it to break past this immediately next level of resistance, because that is a very strong one based on this high that it made back in October. So if it breaks past that one, not only is it giving us a nice chunk of profit on the open trade, but it would give me a more of a sense of comfort that it may indeed have the strength to keep going. So play that one by ear and play that one by ear and see what it brings us as the week begins. And of course, be very careful with it on the parliamentary vote on Tuesday, early evening, late afternoon UK time. That is it for the charts. Setups in progress. Just a brief summary of what I said. With the USD pairs, the government shutdown is now officially over, or is it, as I mentioned before, it's a temporary respite until February 15th, when if there is no agreement on the outcome of the wall or no executive decision from the president, we're going to be back in shutdown. That is, in a little bit more than 2 weeks, we would be back where we were last week. And the markets do not like that level of uncertainty. It was starting to hurt people outside the government because it lasted for more than a month. So there were a lot of things that didn't happen that should have happened. A lot of businesses began to be impacted, and the economy, the market does not appreciate that. So I don't think the dollar is out of the woods just yet, but we'll see what the sentiment looks like this week, as well as, don't forget, we do have an interest rate decision out of the Fed on Wednesday. That will also be a potential needle mover for the dollar and for the dollar pairs. Euro weakness came back after a very dovish outlook from President Draghi of the European Central Bank that happened last week. We traded that one live. We listened to the conference live. He downgraded a lot of the, I guess, assessments that the European Central Bank had made earlier, and basically said that bad times were on the horizon, and the market started reacting with, as I said, euro weakness, which was very nice until Friday. Friday, the market went backwards and went back into euro strength. So we have to wait and see as the week opens to get some sort of guidance as to what the euro is going to be doing for a longer term move. I'm still bearish on it, based on what happened last week, but again, very cautiously, and I'm ready to get out of any of these trades if I see something I don't like. The euro is another one that we're sort of hedged on, so it won't hurt us too much if any of these things don't come to pass, but we definitely would appreciate a breakout in either direction, which would make the winning trades just over exceed. So more on that as it happens. The pound pairs, and I said it before, it's still Brexit. Brexit is still what we need to pay attention to, but now we have the possibility of there not being a Brexit, which has been deemed bullish for the pound. And I agree, if there is no Brexit, the pound should get stronger. But I don't think that decision can be determined yet. So we're still long-term bearish on the pound, but we're not going to fight the trend. We're now trading it up. So we're long on the pound for the time being and for the first time in quite a few months. And again, this week is another critical vote in Parliament, and as hope continues to grow of a possible reboot or an undoing of Brexit altogether. Aussie, New Zealand, we've seen some nice movement out of both currencies. So those Aussie, New Zealand pairs are moving. They're not moving consistently, but they are starting to get some life back into them after a pretty dismal year. So we've seen some nice retraces on both of them, which have stalled. So we need to see if there is enough strength in the Aussie, New Zealand currencies to continue moving, or if we're going to see a test of those bottoms from last year. Jury's still out. We'll be monitoring them very closely, and I am trading them. I guess I'm trading them in both directions as well, just waiting to see which way the breakout happens. And last but not least, the cat pairs. Oil prices were recovering very nicely for the first couple of weeks of the year and have since stagnated. So they've slowed down. They're not moving up anymore. They've indeed started waving up and down, and when they head down, the market gets scared again and the cat drops. And when the opposite happens, the market breathes a huge sigh of relief and the cat gets stronger. So we're in that roller coaster right now. The show isn't over yet. Oil will recover. That's a prophecy I'm pretty happy to make, or a prediction, because that's what always happens. It's cyclical. Oil gets slower, then refineries shut down, and exploration shuts down, and this, that, and the other, which all make oil prices rise again, at which point the refineries and the exploration start up yet again. And when there's too much, when there's a glut of oil, oil prices drop yet again. And that just repeats. It's a never-ending up and down game. Right now, we're waiting for the next upswing, and that is why I am trading the CAD into strength. It may take a while, or it may happen tomorrow, but it will happen, and I'm pretty happy to stay in those CAD trades for the duration. And that is the end of our analysis here for the start of the week. Parting words: change is the one constant in life. That's the only thing we can always count on, is that there will be change. As we enter the final quarter of our first fiscal year in business, we start fiscals in April, so we run April to March. We'll be looking at all the lessons learned in the trading rooms, in the copy trader, in the signals, in our courses, and all of that, and make adjustments as needed to all those products and services, as well as to ourselves as an organization. You may or may not have seen an earlier announcement that was made. Callum is leaving us, and we wish him the best of luck. He's going to be pursuing something more in line with the psychology and mindset of the market, as opposed to the actual mechanics of trading. So he'll be opening up his own services and products in that regard. This is a very amicable parting, so we do wish him the best of luck. And in fact, I'll look forward to opportunities in the future to combine some of the, no doubt, brilliant products that he's going to be producing along with ours. I will continue with the Academy. That was my brainchild from the beginning, and there is no change on my part. Everything continues as is. As I said, I will be doing a little bit of a self-evaluation here and making some adjustments to what we're doing. But in general, it's business as usual. I will be very much focused on the actual mechanics of trading and trading itself, but the psychology is also important to me. So we'll continue in that vein as well. Obviously, it's going to be a little bit of a gap there with Callum moving on, but we will fill that gap at some point. Plus, we have all his material that he's very kindly allowed us to keep, as well as his commitment to anybody that is a current student or a current user of our products, that we do offer lifetime commitment to everything we do. So if any of you that are currently with our academy and courses or anything else that had Callum's involvement, he will be available in perpetuity. So as I said, lifetime. So long as we live, we'll be honoring those commitments. So that's it for now. Does anybody have any comments or questions? Going once, going twice. Okay, then, folks. Thank you very much for joining us. This this is recorded, of course, and will be placed in YouTube as we usually do, and you will receive an email with the appropriate links, both for the recording as well as for the different activities, ledgers, and whatnot for the week. Thank you very much, and I will talk to you next time. Next session will be 8 p.m. tomorrow. Thank you so much, and have a good one.